All right, welcome back to another YouTube video. Today's video is something that I have prepared for you that will make so much sense in the next couple minutes. So to skip all the context and just dive right into it, because I want these videos to basically be me delivering a straight point and then boom, out. And then the next day do the same thing, and the next day do the same thing until you guys basically know everything. So let's say we have a demand zone over here, and it meets all the criteria. It's a higher low that led to a higher high, everything that we normally know about. Maybe it's an extreme, maybe it's a key zone, all that kind of stuff. If you already know me, you already know what I'm talking about. If not, take this as a normal demand zone. And for those of you that don't know, this red box is the Frankfurt basically region, and this is basically my golden window, if you want. I basically trade only on the first hour of the London session or at the second hour of the New York session, and that's because I have basically found from my data that the first hour of the London session comes after the Frankfurt, which Frankfurt being the trap, and the second hour of New York comes after the first, and the first being the trap. So I'm basically avoiding these traps. I'm looking at what the market is telling me, and then I'm basically doing otherwise. So the ability to avoid the losses by simply looking at traps has just been giving me so much comfort in securing and protecting my capital, and that's what I want you guys to start understanding. So let's say a demand zone gets tapped into. We are within the session. We have the break of structure. We have the one leg, the two leg. We have everything that we normally want to have. And what we're all looking for right now is just basically probably refining our zone and entering over here, right? Now, I want you to look closely at when this happens, and I'll literally fast forward and you see price retracing, and now you're like, okay, this is my entry. But then your first zone basically gets taken out. And now you're thinking, okay, what if that's an inducement within the zone? And if I want to mark my structure, I'd be like, okay, build up, sweep, maybe now I'll get a one leg, two leg, I'll probably refine and I'll enter from here, right? Now, not right, because what we want to do is basically have the ability to look for confirmation instead of just jumping in, and that basically only builds up by patience. So if I fast forward the candles one by one, and I'm looking for confirmation, I'm looking for a one leg or two leg. We're continuing to create more lower lows within that zone, and then you see that push, one tap over here. We're looking for a second leg, no second leg. Continuing to create lower lows. When this happens, especially we're out of the session, I want you to disregard your bias, because now the volatility probably won't be moving the same way. Now again, we are not out of session, we are just out of the window where we normally trade from. So if you're already in a trade, that's fine, you can continue being in that trade. But if you haven't entered yet and you're approaching that buffer, which is the 10, 15, at most 20 minutes max, you want to have your confirmations, but right now we are at a lower low. So sellers do have the control over here, and that is because under our zones, which are basically extreme zones or obvious demand zones, there's so much liquidity pools sometimes where price would prefer to just take out this liquidity and then move in your direction. And that becomes frustrating, but we're going to be able to understand and dissect how to avoid that in this session. So, continuing, you see more lower lows being created. You probably might start seeing this push higher, and then you can just wait and just try and find price. Then your zone gets taken out. Now, when your zone gets taken out, by default, if it's a demand zone or a supply zone, if this is a zone with your market structure obviously being in the right place, when this zone gets taken out, obviously, right after, you're going to see a bullish impulse. When that happens, I don't want you to be kind of just jumping in, because you could continue taking more and more liquidity, and then you see this push to the upside. Then you see more breaks of structures to the upside. And when this is happening, I don't want you to say, okay, maybe right now is the trade, even though it's out of the session, maybe this is a break of structure. This is not a break of structure, because now if you're looking at it in a way where it's like, I have build up over here and I have this taken out, we could trend lower. As much as the market wants liquidity is going to grab before we continue higher. So now we're looking for the inducements, we're looking for who has control, and we're looking for basically what makes sense in the market. So what I'm going to do is I'm just going to continue fast forwarding with price, and you're going to see how it's all going to play out just by being patient. So if we continue moving forward, I'll actually fast forward this a little bit. So just watch with me. And then we see price go lower, then starting to shoot higher. Okay. Now, when I'm after this window and I'm not in a trade, I'm basically not going to be in a trade until the New York second hour comes up. So from now, I'm just looking at price. I'm seeing if we're breaking lower in order to sell more, or if we're just sweeping liquidity and then we want to go higher. In both cases, I am just reading price, but I can clearly see that just looking at this, I see a trend line. Whoa, that was a nasty arrow. I see trend line liquidity over here. I see more buildup over here. I see, a push that created a break of structure all the way up, continuing lower. And then I realized that probably this over here, we have more buildup inside this, and then we have sweep, and then we have push higher. When that happens, I'm like, okay, buyers are probably stepping in right now, and I want to mark this as, my first inducement. But I want to still validate this inducement, and I want to see the extent of this inducement actually being an inducement. So I want to see how much power it has. Will it break the structure before it breaks lower? If so, then this inducement will be validated. For now, I'm just going to keep price playing. As much as price is playing and I'm not in the session, I'm okay with just reading. But you could just see that, you have more build-up sweeps, and then we're just continuing higher. So just buyers stepping into the market, it just makes a lot more sense. Continuing higher, and we have our break of structure. So here you could see that the last high that created the low, which was the inducement, has been broken. So we can validate this inducement, and we can say this is a break of structure. Then you could dive down into price, and you see, build up, you see sweeps, and then you see more push higher, and you can validate even more inducements. So now I'm basically just waiting for my session. I don't know yet if this is what is going to be validated, but I can clearly see that this stuff here is, getting mitigated within my demand zones. Obviously, as long as price taps into the imbalance, if it's not far out, so if the whole thing's 3 pips, I don't want you to wait for this, 1 pip zone to enter. You can enter anywhere in that gap, as long as the low is the low of the inducement and the high is up to the imbalance over here. More times than not, it can close the whole thing. But again, with a 2, 3 pip, 4 pip, 5 pip zone, doesn't really matter. I wouldn't want you to miss the trade for a 2 pip zone. So then price continues higher, and I'm just right now just simply waiting for my New York session to play out. And when price comes back here, I'm seeing more inducements happening over here. So I'm seeing demand zone, I'm seeing buyer control, I'm seeing more refined demand zones, I'm seeing more inducements over here. And I want to mark these just to know that when the session comes through, I want to be able to trade off the back of these inducements. So I see this inducement also got induced and then got a push higher. So now I see that this inducement over here got induced too. So this one got induced by this one. But now I need to validate this one. And this is a far out validation because the last high over here, so it would be this high that created this low, is now the reason for this inducement to be validated, because this inducement swept previous buildup. So you can see all this buildup over here, along with an inducement that sent price higher, broke the structure, is also getting induced. So I'm looking for that last high, because that last high has also sweep over here, buildup, sweep, and then a push lower. So let me declutter the chart just so we can see exactly where we are. What we are waiting for is a body close over this to validate this, and then we're waiting for the open of the session, and then we can simply trade off the back of these inducements when the session opens. So, so I'll see 1, 2. Okay, is this gonna close over? All right, great. So we see this over here. Now I'm interested. I'm looking for more gaps. I'm looking for if there's going to be any sort of inducement of this region over here. I'm looking at the low all the way to this high. This might look like a big zone, but to be honest, if I do this over here, the whole thing is 9 pips. We want to refine, obviously, so maybe we can refine to under this one over here, because this is where the last imbalance is. I can have this zone over here, and I can add another zone, which I'm willing to be trading from, depending on if the session opens. Depending on if the session opens in the right way. As you can see, when that is occurring, you are seeing that we're inviting sellers in because we're telling them that we have, bearish engulfing candle, all that kind of stuff. But let me change to demand zone. This looks ugly. And yeah, so now I'm just waiting for my session to open. You'll see that gray box start to pile up, and then we see this one over here. Okay, great. So now what I'm looking at is I'm seeing a tap into this one over here. And this is basically going to be mitigated if we get a one leg, a two leg, or something that's sending me higher, because this is telling me that the imbalance between that last wick and the push higher is being visited. So I'm seeing that this could send price lower or could just continue trending from here. But I'm looking at this being swept out and a push higher. So this is also telling me something. So what I'm going to be doing is I'm also going to refine that zone over here, all the way from here to here, and I'm gonna have that be another inducement. Maybe this could be the session inducement, so I'll just put a highlighter on it, and we can see after that if this gets validated. So what I'm looking for right now is basically to trade off this one over here. So if the entire zone is, well, let's see how much stop loss is. It's 6 pips. I'm not gonna say, okay, I'm just gonna refine my zone all the way to a 1 pip zone and then miss the trade. Because if we do, you probably are going to do that. Remember, this could be mitigated, and because the whole gap over here is 2.5 pips, I'm at Forex.com right here. If you're at FXCM or if you're at Oanda or whatever, this could be completely mitigated or not. So the 1 pip, 2 pip could be really something that makes you miss the trade. I'm looking for my validation in order to enter the trade. So when that happens, I see 1 leg, I see 2 leg. Now, I'm looking at a tap into that zone in order to enter the trade. So I see this confirmation, I see a sweep, I see validation at the 1 leg, I see the 2 leg, I see more imbalance gaps over here. As long as this gets tapped into, I would be in the trade. And when that happens, we'll see what we can target. So we'll see what we can target over here. So, so we get tapped into. Okay, great. Now I'm refining. I see the imbalance gets revisited. I want my stop loss to be under this. Again, I can't have my stop loss all the way here. I'm just trading off the back of the imbalances. So every inducement that gets validated continues higher. And now I'm just continuing with the volatility of the session. So even though price wants to trend lower, as long as I can get my, my 1 to 3, which would be somewhere over here. That is a 6 pip zone all the way to the top. So yeah, you can get your 1 to 3 over here, and when you get your 1 to 3 at this zone, boom, it could be somewhere over here. Now this makes a little bit of sense. It makes a lot more sense. Let's say your entry was somewhere over here. If you want to move to break even, you would have to go to this boy over here, this bad boy. You got this guy, and then when price breaks higher, if there's no more inefficiencies, you can move to break even. You could target this high. You could target, this is a lot of inefficiency. I'm not sure you want to go all the way to the 1 to 10 over here. That's a stretch, to be honest, but we'll see what happens. I also might have this, this looks like a lot of seller control over here, so this could be revisited. We could target the highs. Just to be, normally I'd go for a 1 to 3 or 1 to 10, but we go to a 1 to 5 and we'll see where it goes. I honestly don't remember how this plays out to the T, but quickly you see price continuing higher over here, and we have already moved to break even. You can continue trading higher with this one, holding the trade as long as you meet your 1 to 3 over here, 1 to 5. We're already at a 1 to 5. I don't know how high it continues going. I'll speed it up a little bit, but we'll see. I honestly wanted to go lower, so I want you to basically understand that even if sellers still do have the control somehow, you can trade with the session volatility. But yeah, this continues higher. I don't know if this goes all the way up, but yeah, we'll see. If you were to target the entire imbalance, let's see if you were to hit it. I'm not sure, but we'll see. And yeah, it's not continuing lower. I don't know. Yeah, okay, so whatever. If this goes higher or lower, the point is not to miss the trade. If you're looking for a 1 to 10 and it's 3 pips out, you could have closed it. But again, you want to target the imbalance. You want to target the session highs. You want to target, normally the Frankfurt highs and the Asia highs. But if Frankfurt alone does something like this, obviously this 50 pip zone, the session movement normally averages 25 pips. But this is how you could trade off the inducements happening after your zone gets induced. Yeah, so that being said, I hope this helps. Enjoy.